Hey traders, welcome back. My name is Kenya, professional trader and educator with BK Forex Academy. And if you're watching this video, I just want to say welcome to our channel, or either welcome back. In this important training video, we're going to talk about Forex risk management and position sizing. So if you are a new or struggling trader when it comes to risk management, this training is going to be very important for you. Let's go ahead and hop right in. So what is risk management? Risk management is simply money management. When you start trading, one of the most important skills that you need to master is how to manage or protect your capital. We are in the business of making money, which means we have to learn how to manage our risk. So that is potential losses. When you get into a trade and the market moves against you, what do you do? How do you manage that trade? And this is one skill that I have found that a lot of traders will struggle with. And if it's something that you're struggling with, I'm going to give you a tip on how to correct that. Many traders are just anxious to get right into trading with no regard for their total account balance. When you trade without risk management, you are in fact gambling. So I will tell you that if you are a new trader, you might be tempted to get into the market with no education at all. You just kind of want to feel it out. You're quick to put your live money in the market and you're saying, oh yeah, I am ready to do this. I'm ready to trade my account. And you realize that it's not actually that easy. You really have to have the skill and the practice and the knowledge of what you're doing, or else you're just going to blow your account, and you don't want to do that. So I caution you to slow down and make sure that you're doing this the right way, taking the appropriate steps in order to be successful in your trading. So if you are a struggling trader, one of the things that I recommend you do is stop trading in your live account until you have mastered risk management. If you have a string of losses, you got to look into your trading journal, look at the history of your trades and figure out what is wrong with your trading system and why are you losing and how can you correct it, okay? Now, the next thing is you want to determine your risk appetite. So when you get started trading, one of the things you're gonna have to decide is, how much am I willing to lose when I trade? What am I comfortable with in losing? And what you're gonna find, you might run into a lot of other different traders or even signal programs that may give you a signal to enter a trade. And when you are provided with a stop loss, it doesn't mean that you should in fact use that stop loss, because every trader is different. So some of the things that you wanna consider is, maybe you are a conservative trader where you only wanna risk 1 to 2% of your total account balance. That's what we teach in our academy, is never to risk more than 1 to 2% of your total account balance if you want to live to trade another day. You might be a moderate trader where you want to risk 3 to 5% of your account, or you might be a high risk trader where you might want to risk 6 to 10%, or some traders will risk even as high as 20%, which in my opinion is way too much. So you want to make sure that you're not risking 2% per trade or 10% per trade. I really recommend that you pick an overall percentage and that you not risk losing more than that in your account. So example, if you have a $10,000 account and you want to risk no more than 2% of your total account balance, that means that, let's say that it's New York session or London session trading and you have a balance of 10,000 and you have no trades open at all. Well, if you go and open 6 trades on Euro JPY and you are shorting the market, you want to make sure that you do not risk more than 2%, which is you must have a daily max risk of $200. That's it, okay? And now we have to talk about how to manage your stop loss from there. So before we do that, one of the things that you want to also determine is, what type of trader are you? Are you a scalper where you just want to sit in trades for a few minutes? Are you an intraday trader where you're just going to hold trades for a few hours throughout the course of the business day? Or are you a swing trader where you want to hold trades for days to a few weeks? Or are you a position trader where you're holding trades for weeks to a few years? Now, why is that important? Because the type of trader you are will determine how you set your risk, how you manage your risk, what type of stop loss you're going to use. For example, if you're a scalper, you might find that you want to use a tighter stop loss and bigger position sizes, or you might prefer to use a wider stop loss and have smaller position sizes. So just, you have to know your style. As you can see, if you are new, these are all things that you have to put together, and you can definitely watch YouTube videos and get a lot of free content, but I always encourage every trader who really wants to take this serious is to invest into an educational program and a mentor who can guide you to success. but certainly free content is very helpful. It was very helpful for me, and we love to provide it. Now, the next thing you need to do is determine your position size. So you will learn about this, and some of you might be watching, you already know about this. What lot size should you use? Have you ever asked yourself, what lot size should I use? Or do you just go put on any position size in your account? That's what you don't want to do. You don't want to just hit that execution button or set a limit order and you find that you have 8 trades at $1 lot size and you just enter in trades. No risk management at all. That's how you don't want to trade. So one of the things that you always want to do every single day when you trade is use a position size calculator. The one that I'm using is from earnforex.com. I'll link it right below for you. And you can simply go to Google, type in position size calculator, Forex position size calculator, and you will find a calculator that you like and you can use. With this one in particular, you're just going to select your currency. You then will select your account size. So you can enter your account size. Let's say if it's 15,000 and you're not going to risk no more than 2%. Let's say you are scalping and you're just going to do maybe a 20 or 50 pip stop loss. You would enter that there, enter the currency pair that you're trading. So let's say if we were trading Euro USD and we're going to risk no more than 2%, that means that 2% of 15,000 would be $300. So if we go and open up trades today, our goal is not to lose more than $300 in our account. Once we get close to $300, we have to think about starting to close positions if we want to live to trade another day. Now, our lot size that we can use is $15. What I like to do is break that up and break it into very small positions. So sometimes on my account, especially when I'm scalping, I can have about 15 to 20 positions going and constantly closing out profits. You'll find your style over time, but this is definitely the steps that you want to take to manage your risk. You have to understand risk management, position sizing, how does that work with leverage, and things which you'll find on our channel as well. We go deeper in a deeper dive in our academy, but hopefully this free content will help you if you don't have the funds to invest into a professional program. All right, now what I would do with that lot size that I just gave you an example of is I would take a portion of it and I would be very careful in how I go open up trades. So for example, you can see this chart here that I have of Euro USD on the daily, and recently Euro USD broke out of this sideways range. So you can see at the bottom how this pair moved sideways a bit before it broke to the upside and gave us an impulse to the upside. So let's say if I had bought on that impulse, you can see where my entry would have been. For example, let's say if I placed one position at 0.01 lot size, I can take a 10-cent position out of that, $15, or I could take $1 out of that $15 lot size that I have available, and I can put a trade on. What I don't want to do is, put a standard lot size, $10 a pip, and then I put another standard lot size, and now I'm at $20 a pip, and I'm over my max leverage, okay? So what you have options and how you can manage your risk, but again, you have to find what's comfortable for you. So I recommend that you pick a percentage of your overall account. If you are a new trader, start with using a very low lot size, like 10 cents a pip, 0.01, which is the standard for most Forex brokers. Start there and slowly work your way up, and you'll find something that's comfortable for you. Now, why should you stick with 1 to 2%? Why? Well, the risk management rule here is adherence to this rule keeps you basically protecting your capital, and it minimizes your losses. So you want to make sure that you're living to trade another day. You don't want to, there's a lot of traders out there who can make lots of money in a short amount of time. But the problem is that they can't keep it, okay? So you might get lucky a few times where you might make a couple thousand, couple hundred, and you can make it quickly in Forex, but that's not the way you want to trade. As quickly as you make it, you can also lose it if you don't have good risk management. So, really ignore the messages of, oh, I made $10,000 in 2 days and 3 days. No, that's not common, okay? I really congratulate traders who can make money slow and steady consistently and be consistently profitable. Those are the traders that are going to stick around and last over time. All right, traders can risk 1 to 2% of their account by trading either large positions with a tight stop loss Or you can trade small positions and widen your stop loss and place it far away from your entry or from structure. So those are the two options that you have. As you continue to learn trading, you'll understand exactly what I mean. But those are the two options you have, for managing your risk. You're either going to trade with very large positions and tight stop losses, or you have to widen your stop, and then therefore you can have multiple advantages when the market moves against you. So this is just a rule of thumb, and some traders with large accounts, they may risk less than 1%. Everybody's different. All right, so that is it. I hope that this risk management tutorial was very helpful for you. Make sure you like, comment, and subscribe to our channel. You can also connect with us on Instagram. We're at Brian Kenya Horton. Also check us out on TradingView and follow our profile if you want to receive our trade ideas for free straight to your inbox. I hope you enjoyed this tutorial. God bless you, and I will see you in the next training. Bye.